Today we focus on CRANSWICK PLC, a leading UK food producer. Let's explore the optimal investment strategy and today's best investment recommendation for this company. In the long term, beyond macroeconomic factor and monetary policy, influences include the company's consistent ability to generate profit, stable return, and continuously increasing dividend. These are driven by effective asset allocation, primarily through capital expenditure and strategic acquisitions. In the medium to short term, seasonal trends show a positive trend between April and July, mainly due to the dividend distribution expected at the end of August and insider transaction in July. This period is followed by decline in September and October, with a rebound from November to February, anticipating the expected dividend distribution in February. Based on a deep historical analysis, the optimal investment strategy for CRANSWICK PLC for long-term investors is to maintain a core long position, leveraging the company profitability and dividend distribution, strategy that should be followed as long as the company continues to grow while maintaining stable return on equity and assets. Exit or large reduction in the exposure should be considered only during period of negative return or halt in dividend distribution. In the medium short term instead, it's prudent to hedge against potential seasonal decline as the stock approach period like the end of August and January related to post-dividend distribution. Conversely, leveraging a long position is usually advantageous between November and January and from April to July, based on the expectation of dividend distribution and insider transaction. Let's now explore the current macroeconomic and company environment. The UK is experiencing stable high interest rate, with Bank of England maintaining its tight monetary policy. GDP growth in Q1 2024 outpaced the Eurozone and inflation fell to 2.3% in April 2024. Despite a mixed labor market, the economic outlook suggests a cautious optimism. For CRANSWICK PLC, the last report showed robust performance with a 12% revenue increase, 2.6 billion, and a 26% rise in adjusted profit before tax. The company also significantly reduced its net debt and improved cash flow. Historically, CRANSWICK stocks peaks around July, driven by dividend distribution and insider transaction, followed by declines from September to October. Given the current UK macroeconomic condition and CRANSWICK PLC overvaluation, a strategic investment approach is advised. For long-term investors, opening a core long position of up 25% in CRANSWICK PLC is recommended due to its strong financial performance and consistent dividend, despite the current high price valuation, even if waiting for a more favorable entry point in November could also be beneficial. In the short term instead, avoid short selling as the stock benefits from upcoming dividend support. Historically, in fact, CRANSWICK stocks peaks around July and August and decline from September to October. Better to consider increasing your position in November, potentially leveraging this long position between November and January, raising it from 25% to 50%. Current holders instead should hedge their position with put option and maintain a cash reserve in case of potential decline.